Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is 5:52 in the a.m. Eastern Standard Time, April the 22nd. What we're going to talk about this morning are earnings, what's scheduled to be released this morning and after hours. We have economic data. This is the first bit of economic data we've had all week coming out this morning. We're going to talk about the pre-market activity, as well as a couple of stock chart requests. So let's begin with a word from our sponsors over at TrendSpider. TrendSpider is the next generation automated technical analysis. You need to really embrace technology here, folks, with the usage of automation. What do I mean by that? I'm going to just show you today on how I use the automated trend line feature, the alerts feature, and all of this functionality. Automate your grunt work, speed up your technical analysis, and improve your accuracy. Reduce costly analytical mistakes and find winning chart setups with their market scanner. And these are pre-built. You don't have to learn this. It's already in there. You join up. You go into their literal library of market scanners, find one you like, test it out, and have fun. Find what works for you. Time your trades with precision. How do you do that? How do you do that? You use their algorithms and use their alert functionality. I'll be using it today. So take advantage. They have a 7-day free trial offer. They have a demo tour. They have a university. A lot of tutorials, and you can contact them. They'll walk you through if you have a question. I believe in it so much because I know the owners of the company that I include it with my silver and gold level memberships. It's literally integrated with my business. At the Contrarian Trader, use the link below, 14-day free trial offer. The version of TrendSpider I'll be using today is the same version that my members get. I don't get any special upgrades. I like to use what my members use. That way I stay in contact or in tune with what my members are getting as well. All right, let's get to the markets. Before we go to the pre-market activity, I want to talk about earnings. By and large, no real beta, meaning volatile stocks being reporting today. A lot of stodgy names, your AT&Ts, Freeport-McMoran's not a stodgy name. Southwest Airlines, a lot of transports, Union Pacific Railroad. Those come out in the pre-market. And then after hours, I'll be frank with you, I haven't gone through these yet. I'm not seeing a bunch of beta names here. Pool is a very good company. I'll be watching this one. I really don't like to trade or buy stock on a hope that the stock is going to go up. I'll put on options trades like we did with Netflix. We made a nice profit on Netflix. Even though they missed on earnings, we were fairly neutral. We did an option spread called the Strangle, and we still profited on it. I could have made more. I didn't want to get greedy, so I wanted to get out. Intel reports after hours today. Their earnings reports have been volatile of late. And that's pretty much it. Not much happening here. I know WWE, Worldwide Wrestling, that's been consolidating very, very nicely. In fact, I'm going to take a look at that this morning. Let's bring it up. Really, really nice consolidation. Look at this. This is a 4-hour chart. These will all be 4-hour charts. And you can see here what we have is a cup with handle formation. And here's the play. I would ignore this gap up. I would look for a breakout above. I wouldn't make this trade before the earnings are released. But it appears as though there are a lot of bulls on the name, and they're just waiting. So we're good there. Let's turn this green. All right, we're good to go. So here's your cup handle formation. Very nice downward sloping handle. So WWE is looking really, really good from a long perspective. The only obstacle in the way, of course, is earnings. Let's get that out of the way. Otherwise, it looks as though it wants to go higher. Let's take a peek at pre-market activity. The Russell 2000. We continue to consolidate here. We're very overbought on a monthly time frame, very extended. But the 4-hour chart, you know, you could make the argument, and I maintain that this is still a very good outcome, a probable outcome, is that we break down with this head and shoulders setup. Left shoulder, head, right shoulder. Here's your neckline. When am I wrong? When we break out. When am I right? When we break down. Right now, it's just speculation and conversation. The S&P 500 down slightly. Nice rally back yesterday. Volume was no bueno. So to me, it appeared as though you had more retail in there, as well as shorts covering. So this is a very expensive market. You may be wondering, you know, since the beginning of earnings season, have we seen the Schiller PE ratio come in because earnings is so spectacular? No. PE ratio's gone up. So we've only become more expensive so far this earnings season, but it's very early yet. The NASDAQ 100. Let's clean all this up. Okay. So here is our rising lower band of support, which has been broken. Now what we're looking for is very similar now as to what we're looking at, or were looking at, on the Russell 2000. And that is a head and shoulders setup. Not as crisp, not as clear, but one nonetheless on a 4-hour time frame. So here's your left side, head, right shoulder forming. And here's your neckline. So if we break below the lows of the 21st, S&Ps, in all probability, not the S&P, well, these are all the S&P names, the NASDAQ 100. If the NASDAQ 100 breaks that neckline, it's probably going to take the small caps down with it. But this is all, again, conversation, folks. I don't know this is going to follow through to the downside. I've seen many, many times, especially on indexes, where the head and shoulders setup, which appears like, man, there's no way this is not going to break, all of a sudden it gets negated and you get a break out, not a break down. So you got to wait for the break before you go leaning into the short side. Let's take a look at the U.S. dollar, which is down. It got hammered yesterday. Bearish reversal bar. You can see they tried to recapture support this morning after putting in a higher low. It's being rejected. Let's take a look at how bonds are reacting. Actually, let's go to gold. Oops. There we go. Gold is down. Had a really nice session yesterday. The miners, of which we're along, did very, very well yesterday. Very, very well. I mean, silver miners, of which we're along, gold miners, of which we're along, and looking to add more now. They're looking very strong. Gold is taking a pause this morning. I think it's a pause that refreshes, and it's going up a lot higher. This is a seasonally favorable period of time for gold. So if you're not in it, consider it, because we have a few more months of seasonality in our favor, and the charts are lining up as well favorably to the long side. Bonds, they're up this morning, but we will be looking for, this is not going to last much longer. You're seeing pressure on yields after a big blast higher. I don't think it's going to last. Let's call this an ascending wedge formation. Here's your upper band. Here is your lower band. As long as this rally continues to the upside, I believe that stocks will continue higher. If it breaks support, stocks still can continue higher, but not tech. You got to be aware of tech. You got to be aware of beta, meaning high volatility names. Gasoline was looking good the other day, but it rolled over. We'll be watching this. Bitcoin, wow, down another 1340 this morning. Looks like we're trying to put in a higher low here on RSI. You have a little W formation formed above the 30 mark, bullish. We have a nice consolidation building here. Very nice. Would I buy here? No. Not based upon a 4-hour chart, A. B, I want to see a breakout above resistance. And then, and I would stay very, very small. And then add on strength. But otherwise, it's looking okay. And this is what I like to do for those that are new in the morning. I set up my day. I know what concerns me. Yields concern me. Bitcoin only concerns me in that, we went over this on Sunday night Futures Live on YouTube. And that reminds me, I'm going to come back to Bitcoin in a second. Tonight, Thursday night, 6 p.m. Eastern Standard Time, we go live. And you will be able to see, unfortunately, a picture of me tonight. Why don't I have a picture of me up right now? Because I have bedhead. And I'm embarrassed to show my picture on YouTube. I freely admit it. But tonight, I will have combed hair, washed hair, and I will show the real me. Back to Bitcoin. All right, so Bitcoin looking good here. The reason why I'm concerned about it, going back to Sunday night, is that Bitcoin is speculative, highly, highly speculative. And you saw a lot of weakness on Sunday night, and I said, listen, this is a speculative market. You have retail money in here. Beware. You're probably going to get a follow-through to the downside in sympathy with the markets as Bitcoin is taking it on the chin. Sure enough, it's been a rough week for most. We've done pretty well. Why? We changed strategy. We went from taking a long biased approach to generating cash flow using options and staying pretty much market neutral and staying long of those names that are seasonally favorable and that should do well longer term due to inflation. Gold, food, things like that. And speaking of food, I mean, yesterday, people don't think that there's inflation out there because they listen to the media and our esteemed Fed chairman. But take a look at lumber prices. Finally, we caught a break here, coming in a little bit. But this is a 4-hour chart. Take a look at a weekly chart. A monster move back to the 4-hour chart. Take a look at, let's pull up anything. Cattle. All right, not as bad. I haven't taken a look at this chart in a while. That didn't make my case. But if you want to take a look at it on a monthly chart, a weekly chart, you can. I mean, look at it from last April to now. I mean, we've gone up dramatically. Back to the 4-hour chart. Agriculture is the big Pimp Mac Daddy in the room when it comes down to inflation, corn, ripping. Where are my soybeans or wheat? One of the two. Here we go. Wheat, ripping. Where are my soybeans? Here we go. Soybeans, ripping. This is nuts. This is looking to be a short soon. To be honest with you, we're going to get a pullback here on soybeans, but it's the pause that refreshes. Soybeans are going up higher, wheat's going up higher, corn's going up higher. These are long-term macro trends, folks. And look at this breakout on soybeans. My God. This is a weekly chart. This is bananas. So, agriculture looking very good. Equities, not so good. Let's go to chart requests. Here is Netflix. For those wondering what type of trade we did on this to book a profit in such a nightmarish earnings aftermath, we bought, actually I should say, we sold a strangle. A strangle is when if you do it appropriately and you're using probability tables, is when you sell a deep out of the money call and simultaneously sell a deep out of the money put. So my strikes were, at the time it was trading at $5.49 per share at the close prior to earnings. We sold 600 calls and 500 puts. And we booked those profits yesterday. And our 500 strike was never reached. So those options evaporated pretty quickly because when you're a seller, you take advantage of inflated implied volatility. And after earnings, what happens? You may have bought earnings in the past, and you may have been right on your directional call, and all of a sudden you wake up, man, you go skipping down to your computer, you bought options just prior to the close, you were right in your directional call, yet the options are worth the same, if not less, than where you bought them. Why? It's because you had IV crush, implied volatility crush. There was the demand for those options prior to earnings, so you paid a premium. After earnings, that premium evaporates. So that's why I do not buy options unless I'm protecting a position into earnings, I like to sell them to take advantage of IV crush. And that's exactly what we did yesterday. So nice trade. I may sell some naked calls here on market weakness. I'm just waiting for the volatility to settle down here on Netflix. EPI is a chart request from fellow member Franklin. This is the Wisdom Tree India Fund. India, unfortunately, is suffering dramatically from COVID. And I want to show you the value of the automated trendline functionality. And you could see that this is a weekly chart. And if we begin to add back our automated trend lines, first we'll go weekly. You could see that on the week, we broke down below support. So where to from here? Well, if we fail to rally back and close above $30.30, give or take a dime, that marks a close above this line in green. Again, I'm going to take this off. Automated trend lines. I did not draw these. This is the algorithm. Put them back on. And if we fail to recapture the support level, we're going lower. Where to? It's a rough one because there isn't much support between the lows of this week and support. You know, we could start looking here where you have this volume shelf. This is a more ideal volume shelf here. We'll begin here at $27.62. That's a good distance away on a percentage basis from where we're trading or closed yesterday. I want to create an alert here. I want to know if we touch or bounce or break through. All right, so this is going to be support level number 1 of 2. We're going to keep this active for 30 days because I like India as an emerging market play. I've been looking for a break in the EPI to get long. Ideally, it was due to other matters and not people getting sick and dying. So my sympathies out to those folks in India. So we're looking for a retest of the support level. At worst, I think what's going to happen is this, is that we're going to come down here to 26, let's call it $27 per share. Okay, so again, we're going to keep this active for about a month. Duh. And we're good. So now I set it and forget it because I know the algorithms have told me. Let's take them off. They've told me this ETF is broken at current. Avoid until either A, we recapture support, or B, we hit support levels. Until then, as a matter of fact, let's set up an alert here. I am not going to look at this. I do not want to be tempted to guess a bottom. I want to know that there's a bottom. And when you wait for support levels to get hit, that's the discipline. You know you have buyers of like mind out there that are willing to step up along with you so that the probability of profit increases dramatically. And I keep no sensitivity. All I care about is a close above weekly support, and that is it. And we're good to go. From this point forward, this is a daily chart. We're a bit oversold here. We may rally, but I don't care what it does until it closes above that resistance level. I set up an alert for, or we rally, fade, and then come back down to one of these two or both support levels. So that's EPI. And with that, folks, keep an eye on this morning's economic calendar. We have initial jobless claims coming out at 8:30. Hopefully this number continues to drop. People get back to work. We have also leading economic indicators coming out at 10 a.m. That's not, many people don't pay attention to that. That's important. The Federal Reserve looks at that. So it can influence the market. Traders know that. Tomorrow, the PMI, Purchasing Managers Index. And with that, folks, don't forget, tonight, 6 p.m. Eastern Standard Time, there's a link below to get notified. Enter your email address. We hate spam too. You'll get alerted 15 minutes to a half hour going live. Don't forget, take advantage of TrendSpider. There's a link below, 35% discount code below. I give it away to our silver and gold level members free. If you want to join up, trade alerts, private commentary, and live streams with me. You engage with me, I engage with you to answer your questions. With that, everybody have a profitable trading day. Be well.